Welcome to the fascinating world of trading, where today, we delve into the unique realm of proprietary trading. In the vast financial seascape, a particular type of trading stands out from the rest: proprietary trading, often referred to as prop trading. This term might seem a bit intimidating, but let's break it down. The word proprietary essentially means owned. So when we say proprietary trading, we're talking about trading owned by a particular firm. Now, what sets prop trading apart from other forms of trading? The answer lies in the money. In prop trading, firms use their own capital to trade on the financial markets. This is quite different from other entities in the trading world like hedge funds or asset management firms, which primarily trade with their clients' money. Proprietary trading firms are in the game for their own profit. They are the players, and the stakes are their own. The unique structure of prop trading allows firms to take on more risk. Since they use their own capital, they aren't constrained by client risk tolerance or investment mandates. This freedom allows prop trading firms to engage in a variety of trading strategies, from the traditional long and short positions to complex algorithmic and high-frequency trading. However, this freedom also comes with its own set of challenges. Prop trading firms bear all the risk of their trades. If they make a wrong move, they can suffer significant losses. But on the flip side, if their strategies pay off, they stand to make substantial gains. Prop trading firms operate in a highly regulated environment. They are subject to rules and regulations designed to maintain market integrity and protect investor interests. These regulations can impact the strategies and operations of prop trading firms, adding another layer of complexity to this unique form of trading. So, in essence, prop trading is a high-stakes game played with the firm's own money, making it a unique beast in the world of finance. Now that we understand what prop trading is, let's explore how a typical prop trading firm is structured. In the bustling world of proprietary trading, a firm's structure plays an integral role in its success. It's like an orchestra, each section playing its part to create a harmonious symphony. At the top of this hierarchy, we have the firm's partners or shareholders. They provide the capital that the firm uses for trading and make high-level strategic decisions. Next in line are the traders. They are the heart of the prop trading firm, making the actual trades that generate profits. Traders often specialize in specific financial instruments or markets, such as equities, commodities, or currencies. Their decisions are guided by various strategies including statistical arbitrage, fundamental analysis, and high-frequency trading. Then, we have the analysts. Analysts do the heavy lifting when it comes to research. They delve into the nitty-gritty of market trends, economic indicators, and company financials, providing traders with the insights they need to make informed trading decisions. However, trading isn't just about profits. It's also about managing risk. This is where the risk managers come in. They monitor the firm's trading activities, ensuring that the risks taken are within the firm's risk tolerance. They work closely with traders and analysts, providing feedback and implementing controls to prevent excessive risk-taking. Last but not least, we have the back-office staff. They handle the administrative and operational aspects of the firm. This includes everything from settling trades and managing cash flows to ensuring compliance with regulatory requirements. In a prop trading firm, collaboration between these roles is key. Traders, analysts, and risk managers must work together, sharing information and insights to make the most profitable trades while minimizing risk. It's a delicate balance, but when done right, it can lead to impressive results. The structure of a prop trading firm is designed to maximize profit, manage risk, and ensure a smooth operation of trading activities. It's a finely tuned machine, where each cog plays a crucial role in the firm's success. In the world of prop trading, the stakes are high. With high risk comes the potential for high rewards. Now, let's delve into the nature of these risks and rewards, which are as diverse as they are significant. Let's begin with the risks. Prop trading is a high-stakes game, and the most immediate risk is financial. Traders are playing with the firm's money, and losses directly impact the firm's bottom line. If a trader's strategies do not pan out, it could mean substantial financial losses. Moreover, the market's unpredictable nature is also a constant risk. Even the most seasoned traders can't forecast market movements with absolute certainty. An unexpected economic event, a sudden political shift, or even a natural disaster can turn a promising trade into a losing one in an instant. Prop trading also carries operational risks. These can include everything from technical glitches in trading software to errors in data analysis. Despite the best efforts of risk management teams, these issues can sometimes slip through the cracks, leading to potentially costly mistakes. But where there are risks, there are also rewards, and in prop trading, they can be substantial. The most obvious reward is financial. Successful trades can result in significant profits, and because prop traders typically receive a percentage of the profits they generate, they stand to earn a lot. There's also the intellectual reward. Prop trading is a field that challenges one's analytical skills, decision-making abilities, and resilience. It's a profession that keeps you on your toes, constantly learning and adapting. Additionally, prop trading offers the opportunity to be at the forefront of financial innovation. Traders get to use and develop cutting-edge technology and strategies. They can be part of shaping the future of finance, which in itself can be a rewarding experience. In prop trading, the sky's the limit when it comes to profit, but one must always remember the risks are just as high. It's a world of high stakes, and those who thrive are those who can navigate its complexities with skill, resilience, and a healthy respect for both the risks and rewards. So, we've taken a journey through the thrilling world of prop trading, but what are the key takeaways? Proprietary trading, or prop trading as it's more commonly known, is a unique facet of the financial market. It's where firms or individuals trade stocks, bonds, commodities, their derivatives, or other financial instruments with the firm's own money, as opposed to depositors' money, to make a profit for themselves. It's a high-stakes game of strategy, risk, and potential reward. Let's not forget the structure of prop trading firms. Unlike traditional brokerage firms, prop trading firms operate on a closed-loop system. They don't have clients. Instead, they trade their own capital, taking on all the risk, but also reaping all the rewards. This structure allows for a high degree of flexibility and speed, which can create a competitive advantage in the fast-paced world of trading. Risks and rewards are two sides of the same coin in prop trading. The potential for high returns is alluring, but one must not overlook the inherent risks. The market is unpredictable, and while strategies such as statistical arbitrage, fundamental analysis, and high-frequency trading can be used to mitigate some risks, they can't eliminate them entirely. Moreover, the regulatory landscape is another crucial aspect to consider. Regulatory bodies like the Securities and Exchange Commission keep a close eye on prop trading activities, ensuring that they adhere to strict guidelines and regulations. This aspect adds another layer of complexity to the prop trading scene. In conclusion, prop trading is not for the faint-hearted. It requires a deep understanding of the markets, a sound strategy, and a healthy appetite for risk. But for those who can master these elements, the rewards can be substantial. Remember, prop trading is a unique and exciting part of the trading world, offering high rewards for those who can navigate its risks. It's a game of skill, strategy, and nerve. Are you up for the challenge?